You know what this market needs to just shake off the fears of this coronavirus? It's going to be banger earnings. Just some absolute amazing earnings. And guess what? Amazon, you know what they're going to do? They're going to do it for us. This bad boy right now went up nearly 10% after market after these earnings results that they put. How's it going to translate into the next day? I think it is going to be, honestly, the stock should be somewhere around 5 to 10% up for the next day. Obviously, this will be posted next day, so we'll see how that goes. But my gosh, this quarter was ridiculous. And I mean ridiculously good. Very good for them. So let's get into these numbers. Why is this thing up 10%? And why has it helped the market out a little bit? I mean, what did it do for us? I'm very happy to see. So Amazon beats on a GAAP EPS standpoint. These are generally accepted accounting practices. These are standards. They beat by $2.51. Earlier when I talked about Apple being the most profitable company on the planet, well, it looks like Amazon is taking that role because that is insane profitability. $6.47 per share on an EPS standpoint. Yikes. That is good. I mean, Apple just put up a $5 EPS quarter, but here comes Amazon saying, I don't give a crap about you. I mean, this is a company that was not making profit for the longest time, and now they are you kidding me? $6.47 in EPS? And again, obviously Q4 is a huge one for them because this encompasses the time from, November through December. I mean, this is prime shopping time for the year, and that's fantastic for them. But they also, and you know how much I like talking about the law of large numbers, it's hard to increase revenue significantly when you're already making such a large number. $87 billion of revenue increased 21% year over year. Are you kidding me? And they beat by $1.35 billion. How do you beat estimates by $1.3 billion? Well, I mean, Apple did, but it's so rare to beat estimates that handedly. I mean, they just smacked these estimates around. That is insane. That is an insane quarter. You don't see normally a beat that big. Good for Amazon. Let's get into some of the numbers here. Let's squeak the chair a little bit. It's just tradition. You know I like squeaking the chair. Obviously, Amazon up 10%. Reports quarter four results that beat revenue estimates by $1.35 billion and EPS by 2.51. For Q1, the tech giant expects $69 to $73 billion in sales versus a consensus of $71.63 billion. So their revenue is completely directly in line with consensus. So the overall the guidance isn't absurd. $3 to $4.1 billion of operating income is a little bit below the consensus of 4.04, just a little bit below. Little bit below, but overall, that's okay. Still just a banger of a quarter. So whatever they put up, I mean, I trust them to do well at this point. North America, obviously they were $1 billion over the consensus. $53.7 billion in North America. International, they were a little bit above consensus. Amazon Web Services was a little bit above consensus as well. Not by an incredible amount, but again, I say that, and that's $100 million. If I had $100 million, I'd be retiring right now. So $100 million is technically a good beat, but in the grand scheme of things, it's not a major thing when you're talking about numbers these large. But I will take $100 million Amazon if you have that to spare. Thank you, Jeff Bezos. You have me on speed dial, so please. Business revenue, online stores, $45.7 billion, a little bit above the consensus. Physical stores, obviously Whole Foods would be one of their physical locations, and the new Amazon Go locations, which are going to be a lot more present in the future here. Was a little bit below consensus, but pretty much right on line. Third-party seller services was up by almost $1 billion. Subscription services, a little bit above consensus, and others up by around $200 million. So good for them. Operating income totaled $3 3.88 billion compared to the 2.7 billion consensus. That is a lot of money. That's a lot of money that you just made. 3.88 billion. Good golly, Miss Molly. That's who said that one? If you know it, I appreciate it. Segop income, North America was up by 0.4 billion to consensus. International was actually down 617 million, but the consensus was a negative 890 million. So they did beat on that. Amazon Web Services, 2.6 billion versus a consensus of 2.45 billion. So good. Again, and one thing I mentioned too, and I mentioned with Facebook too, if you look at international, that line, they're always a lot less revenue generating, and definitely income generating than international is way less than North America for good reasons. So the United States has a lot more lax laws in terms of internet security, stuff like that. It's a lot more expensive to do business globally than it is in the United States right now. So that would be part of the reason why you usually see that number of international being rough, and it is not a good sign to see a negative number there, but it's not crazy. So let's look at these conference call slides, because Amazon was lucky enough, they were nice enough to gift us with these. Look at these free cash flows, up 33% year over year, $25.8 billion of free cash flow. Free cash flow from operations reduced by purchases of property, and that's proceeds from sales and incentives. Trailing 12-month period, operating cash flow 25% year over year. Love it. What can I say? Free cash flow, less principal repayments of finance, lease, and financing obligations. So obviously, forget about all this nonsense. Optimized free cash flows. Come on now, that's obviously their long-term goal. They just want to keep that free cash flow going. This is just a bunch of nonsense. They just keep adding on. Like, we care about just the main number of free cash flow. Okay, we don't care about all the things you're breaking down. Here's the total number of shares outstanding. Obviously, there is a little bit more shares out in the market, 512 million versus 507 million a year ago at this time. So a little bit more stock-based awards outstanding, less though than there were there. So they're getting out less stock to, I guess, their associates now potentially. 498 million though. They did dilute shares just a little bit. Selling or putting some more shares out there in the market, but their goal, again, as they say, is efficiently managing dilution. So they're not going to dilute it too much. Net sales up 21% year over year. That's just quality numbers. It's quality numbers. 72 billion versus an 87 billion number. Woo woo woo. Ooh. Crazy stuff. Net sales again broken down here. Quality stuff. Trailing 12-month net sales, cool stuff. Operating income, you see an operating income actually only up 2% year over year, but that is what we like to see. We like to see a good income number. On a trailing 12-month standpoint, right now, operating income is up 17% year over year compared to where it was last year. On a trailing 12-month standpoint. Good for them. And overall net income was up 8% year over year. Good. So segment results, obviously, good old sales, up 22% year over year. Operating income was actually down 16% year over year in North America. International, obviously, they don't do an operating income. They're an operating loss, so you'll see that difference of 642 million versus 617 million this quarter, so a little bit decrease in loss, but sales are up 14%. Sales in Amazon Web Services up 34% year over year. Huge deal for them. You see it a lot, especially with Microsoft's Azure. Cloud is just a very fast growing segment, and a lot of companies are growing that 30+% I mean, Microsoft's growing around 70%, every quarter, but that's okay. Amazon, you can just grow 34%. Didn't mean to throw shade. But operating income increased 19% year over year as well. Good. So as far as its appendix, we'll look at free cash flow here. A good increase in free cash flow. So from 19.4 billion, we'll look at obviously. We'll look after purchase of property and equipment, net of proceeds from sales and incentives. We'll look at the ending free cash flow, 19.4 billion last this quarter last year, I should say. And now they're at 25.825 billion. Good free cash flow numbers. I love it. I love everything about that. So what else do we want to see? It's just gorgeous. There's just gorgeous things. I'm just happy. I'm happy for them. Good for Amazon. I don't really have anything super exciting beyond that. So this is just a fantastic quarter for them. I'm very, very happy for them. I own some partial shares of Amazon. So how about that? I don't own a full share of Amazon, obviously, because there's a price target around, or price of around $2,000. So with how relatively small my portfolio is, this would just be a too large of a portion of my portfolio. So I do own partial shares of Amazon, which I plan on holding. I think the valuation is still quite high, but I think that PE ratio is going to drop quite a good bit, and that forward PE ratio should certainly drop as a result of this. So that's exciting, and I think the stock's going to become a little bit more fairly valued in the future. But overall, that's all I really got to you. Really hope you enjoyed and are enjoying some good old Amazon victories. Let's go.